More than $400 million worth of crypto funds appears to be missing. They were hacked. Oh my gosh. The saga with Sam Bankman-Fried and his cryptocurrency exchange company named FTX just got crazier. In fact, I was just interviewed yesterday by Robert Frank. He's the wealth editor at CNBC, and he just called me yesterday afternoon about the situation, and he asked me why they would have incorporated in the Bahamas, so I can talk more about that later. But I just woke up and it popped up on my phone because I'm a subscriber to Wall Street Journal and just read this shocking article. You won't believe what just happened. It'll blow your mind. So I'll give you a little background about Sam Bankman-Fried. He was worth $16 billion very recently. So bankrupt cryptocurrency exchange FTX is probing a potential hack and asked customers to stay off the FTX website. The company said more than $400 million worth of crypto funds appears to be missing. They were hacked. And somebody stole $400 million. And this just happened after FTX filed for bankruptcy, according to crypto analytics firm Elliptic Enterprises Limited. Now, the potential hack occurred Friday after FTX filed for bankruptcy. And Ryan Miller, FTX's U.S. General Counsel, said Saturday on a tweet that FTX and FTX US had started moving all digital assets to cold storage, which is a crypto wallet that isn't connected to the internet, after the bankruptcy filing. Now, FTX is investigating an abnormalities with the wallet movements related to the consolidation of FTX balances across the exchanges. Mr. Miller said on Twitter, and he called the movements unauthorized transactions, and the facts are still unclear, and FTX will share more information as soon as we have it, he said. Now, a post in the exchange's official Telegram channel called the fund flows a hack. Approximately $473 million of crypto assets appeared to be taken from FTX without permission, according to Tom Robinson, the co-founder of Elliptic. The tokens were quickly converted to Ether, the second largest cryptocurrency, on so-called decentralized exchanges. Now, such platforms popular among hackers to prevent funds from being seized, he said. In a matter of days, Sam Bankman-Fried has gone from crypto hero to villain. His billion-dollar fortune has just collapsed. He's facing the Justice Department and the Securities and Exchange Commission investigations, and his firm FTX is bankrupt with many hopes for the future of crypto itself. In fact, I did a video and I got a lot of flack from it. And I said, listen, cryptocurrency. It's a currency. It's a means of exchange, a means of buying things. It's not an investment. And I know a lot of people have made a lot of money in it, and people who are between 18 and 32 kick and scream and cry and think I'm too old to understand it. No, I understand it. I understand technology well, but it's a means of exchange, and because it's new and was popular, people made a whole ton of money on it. I know that, and I understand that, and I love cryptocurrency. I think it's better than the banks as far as paying for things. But as an investment, I warned against it, and look what's happening. But for buying and selling things, I love it because you don't have to wait for weekends like a wire. You don't have to wait for daytime hours and banking hours. You can pay and get paid around the clock 24/7. So I love it. I love crypto. It's not an investment. I don't care what some kid says living in his mama's basement who wants to kick me for saying that, but it's not. And I've been saying that. Outwardly, now I love cryptocurrency. Don't get me wrong, but it's not an investment. It's a means of exchange, a means of buying things. So going on, that's my perspective. An outwardly genial 30-year-old, commonly referred to as SBF, that's Sam Bankman-Fried. Mr. Bankman-Fried was, until this week, the industry's leading champion. His firm's finances were opaque, but he seemed to be an open book on Twitter. And in scores of media interviews, Bill Clinton, Tom Brady, Katy Perry, and other bold-faced names trekked to FTX's Bahamas base to appear with him at a conference that he organized to promote his vision of the sophisticated financial system built around digital assets, which I think is great. to a certain extent. He spoke recently of becoming the world's first trillionaire. I guess that's not happening anytime soon. He gave liberally to political candidates and causes, and he became an advocate of effective altruism, a trendy philosophical movement that encourages young people to make big bucks so they can donate fortunes to charity. Another side that Mr. Bankman-Fried emerged as his firm grew, and his brusque and insulting with overseas regulators and others. He didn't like regulation. And he said the people involved in the meeting, he demonstrated a kind of a cocksure style in negotiations, this the new rich, cocky kind of thing, I guess, to buy struggling crypto companies. And he courted U.S. politicians and regulators, of course, to keep himself out of trouble, I suppose, and seemed to egg on their scrutiny. Their scrutiny of his rivals. And behind the scenes, so he would be tattling on rivals to get them in trouble, to put them out of business, according to what the Wall Street Journal is saying. And behind the scenes, FTX was using billions of dollars of customer money to fund risky trades by Alameda Research, a digital currency firm he also founded. Now, revelations of the practice this week shocked Mr. Bankman-Fried's admirers, as well as many of his own employees, and the undisclosed loans tore a hole in FTX's finances, and that is the thing that really set the stage for the exchange's swift implosion earlier this week. So, as things crashed, he was making risky investments because, he was used to cryptocurrencies just going up, so thought he could throw caution to the wind. Well, I made videos on it saying, as you can see, look at my channel. In the end, one of Mr. Bankman-Fried's fatal mistakes might have been antagonizing members of the crypto world by advocating for crypto regulation. In particular, he made an enemy with Changpeng Zhao, the billionaire founder of Binance, the world's biggest crypto exchange by trading volume. And Mr. Zhao, which goes by CZ, was an early financial backer of FTX. Now, last weekend, he pulled it apart, tweeting that Binance was dumping its stash of more than $500 million worth of FTT, a token created by FTX. The Binance founder said it was more of a risk management thing, citing a recent report the crypto website CoinDesk, revealing that billions of dollars worth of illiquid tokens were sitting on the balance sheet of FTX's sister firm, Alameda. And that was a problem because it showed Alameda was dangerously dependent on FTT, that's their FTX's token, with uncertain value. And Alameda's finances might collapse if the selling caused the token prices to crash. It was unclear at the time whether Alameda's troubles would extend to FTX, but fears quickly mounted in the market about FTX's stability given the intertwined nature of the two firms, both owned, controlled, that is, by the young Bankman-Fried. And later in the day, Zhao added this dig: Binance wouldn't support those who lobby against players behind their backs. He tweeted, it was a clear reference to Mr. Bankman-Fried's activities in Washington, where the FTX chief had emerged as one of the largest political donors. Almost immediately, hedge funds and other firms yanked money from FTX, causing a crisis that jeopardized the exchange's future. On Sunday alone, customers slammed FTX with $5 billion worth of withdrawals, according to a tweet that was posted by posted by Bankman-Fried. Now, seeking rescue, FTX turned to the same rival who had sparked the crisis, Mr. Zhao, another, the rich guy who's in the same business. Binance agreed to buy FTX, but only to withdraw its bid a day later. Good for them. Adding salt to the wound was that Mr. Bankman-Fried only learned about the deal falling apart after it was reported in the media. He told employees in a Slack message seen by Wall Street Journal. He said, and I'm quoting here, "I'm deeply sorry that we got into this place and for my role in it," he wrote in Slack on a message. "That's on me and me alone. And it sucks, and I'm sorry that it makes and that does not make it any better." Until recently, last month, Mr. Bankman-Fried was boasting about his plans for expansion. He was in talks with investors for fresh cash to purchase efficient acquisitions. He's looking to expand just last month. right before these big troubles arose, and he said at the Journal's Tech Live conference, he said FTX was already well known among crypto pros, and he was interested in buying something that would get more mom and pop traders on board, he said. Now, on Friday, Bankman-Fried resigned as the chief executive. The bankruptcy put an end to frantic efforts to find suitors to save FTX, and an iconic twist given that FTX itself bailed out ailing crypto firms earlier this year. And after previously criticizing bad actors in crypto, Mr. Bankman-Fried is himself facing federal probes. He has described the decision to use consumer funds as a poor judgment call, according to somebody close to the matter. In traditional finance, regulators require brokerages to segregate customer funds from any capital that the firm itself uses for trading. But in the wild west of crypto, the rules are a little murkier, and it wasn't immediately clear what legal consequences that Mr. Bankman-Fried or FTX might face for the loss of customer funds, because the SEC is pretty doggone tough when it comes to regulations, working with other people's money. And Alameda and FTX, again, both Fried's companies, haven't yet detailed what happened to the missing money, though Mr. Bankman-Fried has promised to share the information. And Alameda was known to engage in risky trading strategies and was more vulnerable to volatility in the crypto markets than FTX. Now, Thursday, Bahamian regulators froze the assets of a key FTX subsidiary and appointed a provisional liquidator. It's like a bankruptcy regulators. On Friday, or people that help with the bankruptcy. On Friday morning, FTX and its U.S. unit filed for bankruptcy. What's shocking is the fall from grace was so rapid, said crypto analyst Dan Dolev of Musho Securities. We're learning that value can evaporate within minutes in crypto, and that's the most shocking thing, and I certainly agree. The question is, how you can trust any crypto investment, Mr. Dolev said. Will it expire worthless in a matter of seconds? FTX's collapse also comes as the Fed moves to raise interest rates, as you know, to fight inflation, and in the area of easy money, putting a damper on risky assets like crypto. And that suggests there may be more pain and shock in the financial system to come. Mr. Bankman-Fried grew up on the campus of Stanford University, near a student house known for its vegan food and wild Halloween parties where they didn't wear much clothing. His parents are both professors at Stanford Law School, so he's an educated kid, grew up in an educated family. Joseph Bankman, a tax law expert, and Barbara Fried, who studies the intersection of law, economics, and philosophy. So, well-educated Stanford professor son. So after graduating from MIT, Massachusetts Institute of Technology, as you know, with a physics major, my son got a physics major. It was a physics major as well. Mr. Bankman-Fried took a job at quantitative trading giant Jane Street. And they say he was a shy junior trader, a former colleague recalled, and like others at the firm, he dressed informally, wearing hoodies and walking around the office without shoes, and like a lot of these tech type of companies do nowadays. Over time, he rankled some of the firm by trying to push Jane Street to embrace effective altruism, and this is the former colleague said. In 2017, he started Alameda Research in a rented house in Berkeley, California. Within 2 weeks, the house was overrun with Amazon.com boxes as a small team ordered desks and computers. And Mr. Bankman-Fried recalled in an interview this summer, this effectively every free square foot of space was filled with cardboard boxes. So they're expanding rapidly in this space in this house. We couldn't even get to the kitchen, he said. So he hired a staffer to handle the operations so he could, and the co-founders could focus on trading. And he later moved Alameda to a WeWork office. As you probably know, that's where you have spaces where people can rent space in kind of an open office setting and operate a business within the building with other people that are operating businesses in Hong Kong, where crypto regulations were lighter than the U.S. In fact, when the CNBC guy interviewed me yesterday, I said, that's the reason he incorporated in the Bahamas is because it's easier to get a crypto license there than it is in the U.S. So that's the reason why he chose the Bahamas. And that's what I told the reporter when he interviewed me for the story yesterday. So everywhere in the WeWork space was a small office with few employees, like I was saying, from other crypto company, the Wall Street Journal reports. Binance, according to people familiar with the matter, and the two companies were friendly, at least at first, and then Mr. Bankman-Fried sought to attract crypto newbies through sports sponsorships and advertising. And now get this, he paid $135 million for the naming rights to the Miami Heat's basketball arena to buy and buying Super Bowl commercial featuring comedian Larry David. So Miami Heat basketball arena is just down the street from me, south of me a little bit. He got the naming rights and named it at the FTX arena. Well, I don't think it's going to be called the FTX arena very much longer. I don't know how long its contract is, but $135 million. The FTX moved its own headquarters from the Bahamas for its crypto-friendly regulation environment. There it goes. So that's exactly what I told. That's what the Wall Street Journal says. And that's exactly what I told the reporter even before reading this article. It set up shop in an office park and real estate records show FTX paid $30 million for a 5-bedroom penthouse in a luxury apartment nearby. Wow. Mr. Bankman-Fried said he is one of 10 FTX colleagues who share it. So that it gives you an idea what's going on. The FTX bankruptcy and this breaking news that over $400 million was just stolen right in the midst of the disaster. So I had to bring this to you. I just got up and threw a shirt on and had to make this video for you, let you know what's going on. Like, subscribe, share this video. Appreciate you watching. This is The Business Guy.